gains. Let's get in some more fundamental perspective. In fact, now the Bank Nifty also is building on gains, and so is the mid-cap index, which is up around 0.2%. Mayuresh Joshi of Angel Broking and Tirthankar Patnaik of Mizzou Bank join in now. Afternoon, gentlemen. Tirthankar, coming to you first. It seems as though the market seems to have factored in all of the changes from the Mauritius tax treaty. Your sense?
Well, the treaty was expected to be a fairly long time in coming. I mean, the first steps were made by the government way back in 2007 when market regulator study had actually cracked up against offshore derivative instruments, P-notes or ODIs. And at that point, the reaction of the market was fairly negative. We had a market break on the Nifty that day. But post that, it led to a sharp rise in registration by FIIs. The move to come in line has been fairly strong, and especially on the Mauritius treaty, there has been a long move by the government in trying to gain access to capital gains, especially on money that's getting rerouted from India back to India through Mauritius. So from that perspective, this is a positive. Of course, on the short-term side, some market participants would have taken it negatively in terms of cost of business, doing business in India becomes slightly higher.
Okay, Tirthankar, hi, good morning. So, what from here? Today, of course, the market has recovered all the lost ground of the first 10 or 15 minutes of trade. But going forward, do you think the kind of outperformance that we have seen for Indian market over the last 1 week or so, can that be sustained?
Well, Indian markets, if you notice, since the recovery in March, Indian markets have been largely moving in tandem, with other risk assets, emerging markets, MSCI emerging markets or commodity markets, but with a gradual divergence. And that divergence is riding out of India's macro outperformance, be it on current account, be it on fiscal deficit, be it on inflation. These are cases where India's outperformance is showing up. We believe that the fourth quarter earnings season has been reasonable so far. Sales growth of about 400 odd companies that we have analyzed is marginally looking up at about 6.3%. It's probably the best we have seen in about 4 quarters. The growth at the EBITDA level has been even better, showing that margins are still inching up despite all the pain. So from that perspective, we should see Indian outperformance continue, barring any other event risk.
Okay, fair enough, Tirthankar. We're going to let you go on that note. Thanks very much for joining in and taking us through your view on the markets. In fact, we now have Mayuresh Joshi of Angel Broking waiting by as well. Mayuresh, I was looking at a couple of your stock picks, and the first one which stands out is Voltas. We were just having a discussion on it. Your sense in terms of the market share that they have, and what more fundamental gains do you expect from the company?
Morning, Ekta. If you look at the business model, 20% market share is already with Voltas at this point of time. The two key segments that they operate out of, the EMP segment and the unitary cooling product solution segment, the EMP has not been doing so well over the past so many quarters, but our own expectations is with legacy orders coming almost to an end, with an order book of close to 3,514 odd crores, 1.4 times book to bill. The EBIT margins on this segment will slowly and steadily improve from 1% to 5% over the next 2 to 3 years. Having said that, the next few triggers is related to the Qatar World Cup, the Dubai Expo, gives huge amount of opportunities for a player like Voltas, even in a scenario where oil prices are expected to remain in a very tight range. On the unitary cooling solutions, 72% contribution on the EBIT comes from this part. It's been growing at a very healthy pace, 10,000 plus retail touch points, models getting introduced, after sales services getting strengthened. All these factors would probably ensure that EBITDA margins, even on a consolidated basis, should improve drastically for the company. In terms of cash flows, the company has been generating reasonable cash flows over the last 3 years, 620 odd crores, which is generated. And largely, again, in terms of ROE expansion, our own sense is from 16% that the company is generating right now, 19% is easily feasible. So to sum up the financials, my own take is a 10% growth in terms of top line, or 13-14% in terms of bottom line. What we're probably witnessing right now in terms of the heat wave, the kind of AC sales that are expected to go through specifically for this quarter, I think that will have a huge amount of impact in terms of how the volume growth for the company will also happen, as well as market share gains. So I think finding it extremely attractive in at this time, 18 times FY17 earnings, and my own take is that the stock is expected to do well over the next 2-year time horizon.
Okay, Mayuresh, hi, good morning. The stock of the moment right now is Z Entertainment. What did you make of the numbers and the kind of re-rating that the stock is going through?
Morning, Anuj. Clearly the stock surprised in terms of how the subscription revenues came through, and the management guidance again going forward is extremely strong. So I think advertising growth in terms of 15-16%, you're probably looking at subscription growth going in double digits. That really augurs well in terms of how the top line is expected to grow for Z over FY17. If one really contends with the perspective that sport losses might increase further from here onwards, and they've curtailed it quite reasonably over the last year, my own take is that EBITDA margins should sustain for the company with digitalization coming through. Subscription revenues can go to the mark that the management is talking about. The ad yields can be quite reasonable going forward with spending coming through both from the e-commerce players as well as the FMCG players. The only headwind probably can be the historical valuations and the current valuations that Z is deriving. But again, I think the business model looks quite robust. So in my opinion, I think the stock is expected to do well. I remain optimistic on the stock, and a clear disclaimer, we might be holding this on behalf of our clients.
Okay, fair enough, Mayuresh. Thanks very much for joining in Z Entertainment. Yes, stock of the day up around 7%. A lot of brokerages have target prices such as 465, and it seems as though it is moving towards that. We'll take a break.